Let's get in our technical expert, Sacchitanand Uttekar joins us. Hi Sachi, morning. Give us your trade on the index. How do you approach the Nifty as well as the Nifty Bank?
I think Nifty is already squeezed in within its previous day's swing range. So unless we don't see a breakout, probably the chances of momentum look bleak. On the higher side, we are still expecting a swing towards 17,855, and probably the floor which we are seeing right now at 17,750. You know that this particular floor may not be breached on a closing basis. So probably the expiry could shape up somewhere close to 17,800, 17,850 on the higher side of this particular range. When it comes to Bank Nifty, I think the data is still more confident unless we don't see Bank Nifty slipping below that 41,650 mark. We are not seeing any signs of change in momentum. So probably the expiry could shape up somewhere close to 41,900, 42,000. So we expect this particular outperformance to continue. So what we have done is we have already recommended a particular trade to our clients via the Bank Nifty options. We are expecting the move to unlock towards 42,000, and that's why we have recommended buying 41,600 call option, which is placed somewhere close to around 165 right now. The stop loss should be placed at around 70, and we are expecting a move towards 355.
It's interesting where we're poised, Sachi. You know, the Nifty Bank is right at the 100-day moving average. This is a level that a lot of the street were believing that could be a bit of a resistance. But if the Nifty Bank as a lead indicator, stays above that 100-day moving average, doors perhaps open for the Nifty to go there as well, which is closer to the 17,900 mark, 17,880 thereabouts. You're speaking about the two pillars, Nigel, the IT index and the Nifty Bank. I'm just looking at a couple of other support points that would come by. One would be Reliance, which is sitting with a gain of almost 2/3%. Reliance is virtually at the higher end of today's trading range. And the second is the FMCG pack, which was under a wee bit of pressure yesterday, but now the FMCG index is at the high point of trade, led by HUL and Britannia itself. On Britannia, the stock is up 1.5%, but remember, optically it's just 1.5%. Today it went ex-dividend by 72 rupees as well. So if you add that back, the stock is actually up by almost 3%. So those are a bunch of stocks which are doing well. Sachi, your individual stock ideas for this morning?
Good morning, Mangalam. Mangalam, I think FMCG pack is definitely outperforming today. We've already seen good short covering moves led by Britannia and HUL. But if you look at the data of Dabur, which was scaling lower, right now what we have observed is fresh long positions. The floor at around 520, I think this particular floor may not be breached. So probably a trading swing back to its 20-week exponential moving average is likely, and the reward to risk is very beautifully placed. I think long positions can be deployed here in Dabur. Stop loss should be placed at around 519 on a closing basis, and we are expecting a swing back towards 540, 544 kind of a zone. The second stock that is on our radar is Bajaj Finance. If you look at the structure, there's a good classic higher top, higher bottom sequence. For the last 3 trading sessions, we have seen some consolidation here. If you look at the candlestick formation, this looks like a rising 3 formation with a base well placed somewhere close to 5,800. The stop loss should be placed at 5,830 when it comes to futures. We are expecting a positional swing towards 6,130. So probably this will be one of the stocks which may lead Bank Nifty also further.
All right, Bajaj Finance not a part of the Nifty Bank, but Nifty Financial Index could be supported by that. Thank you, Sachi, for joining in.